Audio test. Hello, hello. Audio test. Hello, hello. Audio test. Okay, looks like we are good. Okay, looks like we are good. Let me see if that worked. Okay. Hold on, just getting everything situated. Posting on my Instagram. Okay. I think we should be good. Are we live? I think we're live. Okay. Are we live? All right, everything is good. So, this is my second day of demo trading live since I started studying ICT 3 months ago to the day, actually. I started June 18th and now it is September 18th. So, literally 3 months ago to the day, I started studying ICT. Today's my second day demo trading, actually pushing a button, executing live. So, I'm just going to be trading the New York morning session today. Now, today is also FOMC, so I literally have absolutely, really no expectations for what price can do today. I'm still just gonna observe and watch price action because it's always good to get the screen time, get the experience. So here's my 9:30 approach. First thing that I do is mark out the previous day settlement. And this is gonna give me a lot of intel. So it looks like we have a premium gap opening. We're opening higher than the previous day settlement. So this is my opening range gap low. Okay, so I marked that. And it looks like we have a gap opening of over 40 handles. So if we have a gap opening over 40 handles, that is a good indication that we could potentially see some volatility in this session. So it's good. So just waiting for the 9:30 open. We have a premium gap opening. 15-minute time frame. I have to mark my areas of liquidity. So we can see that we have these relative equal lows below the marketplace. It's also paired with the new day opening gap, so that could potentially be a draw. Now above the marketplace, we can see that we ran out these buy stops. We're creating new highs. We're also trading into this imbalance here. This imbalance here. We can also mark out consequent encroachment of this wick. And on the 15-minute time frame, it looks like we're closing outside of this new week opening gap. So we could potentially frame a reversal off the new week opening gap. Because if we're closing below it on the 15-minute time frame and the bodies of the candles tell the narrative, then that is indicative of weakness. And if we look below the marketplace, we have a lot of very clean lows down here. A lot of smooth lows left down here. You can draw a trend line. So we have a retail idea below the marketplace. You could look to fade that. So for the first half hour, if we have a premium gap opening, there is a 70% likelihood that price is going to trade down to consequent encroachment of the opening range gap. So that is literally your bias in the first 30 minutes of market open. So here we have the 9:30 open. Opening range gap high, and it looks like we're just diving right for consequent encroachment. So I'm going to go ahead and find the midpoint here. Right there. Opening range gap CE. There's consequent encroachment. Switch back to electronic trading hours. So we can see that we took these relative equal highs here. Now we're making our way towards consequent encroachment. So initially we drop lower, we run out these sell stops, working towards consequent encroachment. We have a 70% likelihood of it trading there in the first half hour market open, and that's about 20 handles away. So not much of a range. So our opening range gap is 40 handles, so that's good. We could potentially have some volatility today. And now I'm just simply being patient and waiting, sitting still, like a predator. Let me see if everything is good. Okay, we're good. So simply being patient, sitting still, waiting. We have FOMC later today, so the probability of really seeing anything of quality is extremely, extremely low. So on the 5-minute, we're closing below that new week opening gap, as well as on the 15-minute. And we're trading down into a higher time frame imbalance. A lot of back and forth so far. Nothing much going on. Notice the closes below here. We trade down into this inefficiency here. So we've already reached consequent encroachment of the opening range gap. 70% chance it can get down there in the first half hour market open, and we do that in the first minute. So there you go. There's that. So far we just have a lot of back and forth. On the higher time frame, we could potentially work towards these down here, relative equal lows below the marketplace. Everything up here is jagged. I don't see anything smooth up here. And look how we're trading off of that new week opening gap. We'd have to work through this imbalance right here and this. And if you look left, look what we're also trading into. So we're rejecting the consequent encroachment of this premium wick as well as the new week opening gap. So just being patient. Sitting still, waiting, watching, stalking, and hunting. 9:34, 4 minutes in. I don't see anything. I don't have to see anything. So right away we can tell that we are drawing towards these relative equal lows down here. This might be our first presented fair value gap. But honestly, I don't think I would look to take a short off of that, simply because we're trading into a discount now. It's just too far gone, and I wouldn't want to chase it. So, not really focused on executing any trades today. I really just want to watch price action and just get more screen time, more experience. So there we have a gap fill. We did that rather fast. Very large down close candle on the 5 minute, which is all this action right here. And we're really working towards those relative equal lows below. So here you have your first presented fair value gap, which is simply the first fair value gap that we see post 9:30. There's your first presentation, so you'd want to see if we can trade up into that, see it act as rocket fuel, and then see some acceleration lower. So the draw on liquidity, I believe, is down here, right here, low day. Simply because everything up here is pretty jagged. You can physically see the damage done in the chart. It's all jagged up here. We had these smooth lows below it, ran it really quick, really fast. Rejected the new week opening gap, rejected consequent encroachment of the premium wick, and now price is rolling over. So I would not look to take a short off of this imbalance right here, simply because we are just way too far deep down into a discount. That would be considered chasing. The move basically already happened. It's too far gone, I wouldn't look to take it. Look at this reaction here off of the new day opening gap. See how we react to first presentation. We have a gap closure. So that was fast. That was a quick gap closure in the first 4 minutes of market open. And that is why it's very probable that we could see the market trade down there. You see, we just literally just dove right for it. So that in itself can be a trade model. Literally just looking for consequent encroachment in the first half hour, because you have a 70% likelihood it's going to do so. Now look how we just wick up into first presentation right there. So that's a good reaction off of that. But I'm not willing to sell short so far deep down into a discount. That would be considered chasing for me. Look at all these lows we already cleared. So this can play out, and I'm totally fine with that. I don't care, because I know that my trade model is present literally every single day in price action. So that's how I feel absolutely no FOMO. I used to feel FOMO all the time. I would chase shit left and right when I was trading order flow and supply demand. But now I know exactly what I'm looking for. I'm looking for a very specific signature in price action, and I know that it repeats on a daily basis. And I know that I can literally just sit and wait for that and see it every single day. I don't have to catch every fluctuation in price, because I know that my model is going to be there. Huge paradigm shift. A huge... Reached a whole new level of maturity in my trading. So look at that. That is a perfect reaction. So as soon as we see the first presented fair value gap, look how we treat it. Boom, dig up right into that. Boom, rolling over, and then aiming for those relative equal lows down here. So we are seeing some good volatility, even though we have FOMC later today. Aiming for this low right here, and then ultimately this low. So that could have been a selling opportunity there, but I was not willing to take it because of how far down into a discount it was, which is fine. I don't need to chase shit. My model's going to be there every single day. But if I go back up to the 15-minute, I was outlining how we were closing below the new week opening gap. So you can use these gaps to grade the strength and weakness of the market. If we wake up into it and we close below it on a 15-minute time frame, that is indicative of weakness. So we do that on 3 consecutive candles, and then look at the move that we see afterwards. After a premium gap opening, there's a 70% likelihood that we're going to trade to consequent encroachment in the first half-hour market open. We're also rejecting a premium wick on the 15-minute chart, closing below that as well. We have a little stop hunt right here, and that's where we ran those relative equal highs on the lower time frame. Right here, stop hunt there, volume imbalance there, trade up into the volume imbalance, close lower, order block, trade up into the order block, and we roll over. So this is a propulsion block because we have an order block formed off of an order block. And look how price digs up into that, and then it literally is sent lower. So it was a very clean move right off the open. Very clean move. And if I go to the higher time frame, you can see that we have this hourly imbalance that we're trading into. So we can drop quadrants on that and see how we respect that. So look how we close below the upper quadrant right here. So we did traverse over consequent encroachment, but look how we respected the upper quadrant of that imbalance. Close right below it there. And now we're aiming for, I would say, this low. And there's also a lot of sell side liquidity below Tuesday's daily low. Not sure why I have this. So these lows are also relatively equal. And if you look above the marketplace, there isn't really anything smooth up here. So sitting, watching, stalking, waiting, hunting. Patience. Extreme patience. Demo trading. Not trading with real money. So we're revisiting first presentation. We have a stop run underneath this low right here. And now look at the reaction that we're seeing here. So now we're literally overlapping that entire move that we saw. We ran this low, very shallow run. We have this inversion fair value gap here, a fair value gap here. Still rejecting first presentation. So until we can get above first presentation, then I would think that nothing has changed. I would not look to be long until we can inverse first presentation, get over that, and then maybe we could climb higher back up into these highs. So it was strong reaction running the sell side below this low, also trading into the new day opening gap. Now we're trading back up into a imbalance on the 5-minute. Let's see how this 15-minute candle closes in the next minute. So today is a day where I'm not expecting precision. I'm not expecting quality setups to be present because we have FOMC tomorrow or later today. So here's the 5-minute. We're trading up into that imbalance here. We have this inversion fair value gap as well. So we have a bit of a balanced price range. We're still closing inside of first presentation, so that would indicate to me that nothing has changed. We run the short-term high here. That actually might be another selling opportunity. If we get stabbed into this order block here. Notice this imbalance below. So we're leaving a large lower wick on the 15-minute, but it looks like we're still going to close within an imbalance. Look at that close below. There you go. Leaving a wick up into the 5-minute imbalance. Close below that. So I'm just observing price action. Close through that 15-minute imbalance. So, oh shit. So we trade back up into first presentation. Now, admittedly, I wanted to sell short when it was digging up in there, but I felt a lot of emotions. Let me record this. Still waiting, still watching. I think this was a good selling opportunity here. We're digging up to first presentation. The body's still closed within it. We leave this wick. We dig up into first presentation and the wick, and we close below. Both indications of weakness. If we look on the 5-minute time frame, you can see prices trading up into that sell side imbalance, buy side inefficiency. We failed to reach consequent encroachment, so that's indicative of weakness. We still have this low down here. We did run this low. It was a very shallow run, though. So, might have been a missed opportunity. I was too scared to pull the trigger. I felt a lot of anxiety. Which is fine. I'll go back and study the trade later. Totally fine. But I do think this was a good setup. Look how we ran this short-term high inside of the first presented for value gap, never closed outside of it. Large wick, trade up to consequent encroachment, and we roll over. So this was a missed selling opportunity, I believe. I was looking to sell short up into here, but I kind of froze up, felt a lot of anxiety, emotions, and I'm not even trading real money, so that's an issue that I'll have to fix. Stop would have been above candle 2's high right here. Doink. So now I'm simply waiting for 10 o'clock silver bullet, something that makes sense. Clear imbalance that makes sense. So we form these relative equal lows below. So here we have minor sell side liquidity. And there's our propulsion block right there. So come up, hammer the open price. So that could have been another opportunity to get on side. Here's the start of the 950 macro. So we have a stop run there. Now we're aggressively spooling higher. We can use this macro to give some information about what this price wants to do. So we have a large lower wick on the 15-minute time frame. Nothing's really clear, nothing's really setting up at this moment. We have these clean highs in here. Shallow run here, another run down there. So now this area price is made jagged. So now the market's going to want to seek buy side liquidity, potentially above these highs. So from here to here would have been a nice selling opportunity. Very quick low threshold objective. It's not necessarily in my trade model, but that would have been a quick 35 handles risking 13, 12. Zoom out to the 15-minute. We're leaving this large lower wick. We do not, at the moment, we're failing to close below consequent encroachment of that. Let's see if we leave this open and form an imbalance. So, because it's FOMC later today, we might just stay in this range. We might not go anywhere. But now we're back at consequent encroachment at the opening range gap and first presentation. So we had a stop run underneath these lows. Now the market's seeking buy side above these highs during the macro. So during the macro, it looks like we're spooling for buy side. So here's minor buy side liquidity here. If this becomes a swing high, we have relative equal highs. Still closing below first presentation, so nothing has really changed. If we could get up above first presentation and then use it as support, we could probably explore up here. So if this candle closes, then we have relative equal highs. This candle closes below the high of this one. Something to watch. So we're still closing below the first presented for value gap. Now we have relative equal highs. Let's just see what they do with that. I still have not seen my trade model present in price action. There's been nothing of quality. A lot of back and forth so far. If you look on the 5 minute, let's go to the 5 minute. We have a lot of back and forth in here, so nothing really of quality. We're still closing below consequent encroachment of this though. We have a shallow stop run here, and that these lows are relatively equal. What could I aim for above? We have these relative equal highs here. Could reach up into this high. And we have this large imbalance left. A lot of back and forth. So we had one initial drop down at 9:30, and then since then it's really doing nothing. So if it continues to behave this way by 10:30, then I'm done watching price action. I'm gonna go do something more productive. But really, I'm just watching price action, just getting more screen time, more experience, because you have to know exactly what market conditions look like when you don't want to engage, and that would be this here. These are not conditions that I would look to engage. High resistance liquidity conditions, the market's having a hard time going anywhere. We've been stuck in this range for almost 20 minutes now. We were on the buy side there, so we have a little stop run there. Trade above those relative equal highs. And notice there's a lack of imbalances forming. So when we have a lack of imbalances forming, it usually indicates high resistance liquidity conditions. And really the only PD arrays that you have are volume imbalances and pools of liquidity. So we run the short-term high there. Looks like we're dropping down now. Look at the work off of consequent encroachment of the opening range gap. Run the minor buy side liquidity. We're still not really going anywhere. Still a lot of back and forth. Up, down, up, down, up, down. Not doing much. But we can see that this is literally acting like a brick wall. Bodies are still closing within it. And on the 5 minute, that lines up with this imbalance here. So this is a good example of conditions that I would not engage in. Perfect example. There's a lack of separation between the ranges. We have no imbalances forming. Nothing I want to be involved in. We just had that initial drop down at 9:30, and since then, it's been dry. We're in the 950 to 1010 macro, and it's still lacking any enthusiasm, any speed. Not doing much. So, lackluster conditions. I mean, my whole intention of coming on here today was just simply look at what does the market look like when I don't want to engage. And this would be a perfect example. So now we have a trend line forming, somewhat, a little bit below. We still cannot get over first presented fair value gap. Still cannot get over the first presented fair value gap. This thing is acting like a brick wall. I mean, this is exactly what you would expect before FOMC. So, if we still behave like this at 10:30, then I'm done watching price action, and I will do something more productive with my day. We only have that one move right off 9:30, but there is nothing to get involved with that move. Except this. See, the reason I didn't want to sell short on the rally, on this push into first presentation, was because if we look at the range that we're retracing back into, we're below a discount. We're in a discount. We're below a premium. So I want to sell expensive premiums and buy cheap discounts. Still absolutely sideways, still nothing. Very lackluster, very boring. Ain't shit going on. The thing is you want it to be boring. So we literally have no separation in the ranges at all. None. A prime example of exactly what I would not want to trade. Look at the 5-minute. Price action is actually disgusting. No separation in the ranges. All we see is a lot of wicks. We have one imbalance here. We cannot get over first presented for value gap. Nothing going on. So this definitely saved me a low quality setup right here. Right here. So that is a rule of engagement that I have. I do not sell cheap discounts. I buy cheap discounts, I don't sell them. So because we were below equilibrium of this range, I'm not taking the market short here. But I could have had a quick little 26 handle scalp there. It's not really something I look for though. And the market is dead. High resistance liquidity conditions, no separation in the ranges. So we're wicking up into the 15-minute imbalance now. So in the morning session, it would be interesting to see what do they do with the market before FOMC. Do they put it into a discount or do they put it into a premium? Because we'll probably run against that during FOMC. So this is my first day watching FOMC, pre-FOMC price action since I started studying ICT. This is absolutely not what I want to engage in. And I'm probably going to hop off here soon. This is just very lackluster. And I'll get started with something else. I think today I'm going to work on building rules of engagement. So what else do I need? I have a basis for my trade model. I made that. I need to make rules of engagement. And I need to specify specific situations that I have emotional reactions in. Let me just think. So this trade model is not present in price action today, which is expected. It's FOMC later today. But there was one very clean move here that I missed because I was trying to fix my stream settings and get the quality better. But this is what I missed. Very clear in hindsight, of course. But here was the primary buy side liquidity going into 7 o'clock, this was the high day right here. So there's your primary buy side liquidity. We run that, notice how we close below it. What does that indicate? Weakness. And then we immediately see large displacement lower. This leaves a sell side imbalance, buy side inefficiency. So you can mark that out. We also have inversion fair value gap right here that lines up with this fair value gap right here, this bearish fair value gap. We form these relative equal highs, we drop lower, displace lower, and then we come back up, run the buy side above these relative equal highs, trade up into the inversion fair value gap, as well as the breaker, as well as the sell side imbalance, buy side inefficiency, and then we roll over. And why do we roll over? Because look at all these clean, very clean, smooth lows left below the marketplace. And then this was what really caught my eye when I came to the market today. I annotated this as minor buy side liquidity, primary down here, but these are very, very clean. So that is an area of support and retail eyes, and the algorithm is going to attack the liquidity below that. And then if we look above that, very clean lows. You could draw a trend line here, and I'm going to fade that. So we run the high a day, and then boom, large displacement lower, and this is my trade model. This is what I would look for. Breaker formation, we have a high, a low, a higher high, and a lower low down here. So here's your breaker candle, that last down close candle before the turn. And then I'm looking for an inversion fair value gap, a sell side imbalance, buy side inefficiency. We have a change in the state of delivery here. And then I would look to sell short on the inversion fair value gap. So once we have a confirmed change in the state of delivery, well, we actually have one here. We have a little up close candle here. But once we close over all these up close candles, then I can look, okay, where's my inversion fair value gap? We have it right here. And this is where I would look to sell short. And then boom, we hammer that, close below it. So notice how we close below this inefficiency as well as this one. So that indicates weakness. And then I would have targeted these clean lows and this low down here. So that is what I was looking for going to 7 o'clock, but then I spent like 2 hours trying to fix my stream settings. So that's fine. But all this is just fucking disgusting. You would not want to trade this at all. Notice how we never close above the first presented for value gap. And look how it acts as a brick wall, and look at all. So if the market wasn't showing me these conditions here, and it was clean, and there was separation in the ranges, and there's imbalances forming, this is exactly what I would want to see. Notice how we take a short-term high. Oh my God, what is going on? So there's the draw on liquidity that I outlined at 9:30. So when the market was here, I was like, we're going down here. And we get there 40 minutes into market open. But there's just literally just nothing that I want to get involved with. Nothing. So if I took this hypothetical short here, my stop loss would be above candle 2. I would have got stopped out, which is, I could try to weather these conditions because knowing that we have FOMC later in the day, I have to expect coloring outside the lines. Because we have FOMC later in the day, that market conditions are going to be muddy. It's not going to be clear. It's not going to give you precision, right? So I have to expect coloring outside of the lines, which is everything that we see here. Look at all these mohawks that we give to the first presented for value gap. Now on a normal day, we'd probably see something like this and then just move lower, run right into the primary sell side liquidity. But because it's FOMC, and this is just characteristics of the morning session before then, we expect coloring outside the lines. So if I were to sell short here, which I was looking to, but I literally froze up and I didn't, I hesitated, then I would probably have to widen my stop a bit because we have FOMC later today. We expect to see coloring outside the lines. So I would probably put my stop loss at consequent encroachment of this wick. But if I did sell short here, then I wouldn't be aware of that in the moment. Then I would have put my stop like here, and I would have got stopped out. It has to be, what, 2 ticks above candle 2's high. So what's the high here? 71625. So my stop would have to be at 7.5. So right. Oh shit! Look at that. I wouldn't have stopped out. So I did hesitate. I was looking to get my entry here. Stop would have been 1, 2 ticks above candle 2 high, so risking 14 14 and a quarter handles. And I would target the primary sell side liquidity here. That would have been a 3R. But I hesitated. So that's something I got to work on. Became one tick shy of that stop right here. So what I was reading right here is we formed a short-term high inside of first presentation. We come back, we run that short-term high, and then I'm noticing how the bodies are still closing within it. And then this candle closes below, so that indicates weakness. And then I drew a fib right here. Let me delete this. And this. So I put a fib on this wick, and I was monitoring how we respected consequent encouragement. So I could have sold short when we opened here, traded back up into consequent encouragement there. That would have been a selling opportunity with this stop above, 2 ticks above candle 2 high. But I hesitated. My first partial would be at the initial short-term low. My terminus would be at the primary sell-side liquidity. But all this is very, very back and forth. There's no separation in the ranges. It's not something that I would look to trade. So, I mean, I would have just sat in this for a while. This probably would have pissed me off. Because knowing myself, when the market falls into a slow grind like this and just moves back and forth, that tends to really piss me off. So that's another thing that I have to work on. These are all things that you got to be aware of. What are your triggers? What are your emotional triggers? You can't allow the market to make you feel a certain way and then let that affect your behavior and your decision making. So I froze up here. I was going to sell short here. Froze up. Thought about, what if this is wrong? What if I stop out? You know, things like that. So worried about being wrong there. And that prevented me from selling short in first presentation. Maybe another selling opportunity would be seeing the accumulation of shorts above these highs. Because each time we take a short-term high, we have a lack of displacement, lower or higher. So this indicates to me that there's somebody absorbing the buy stop orders. They're taking the other side of those trades. Above here, somebody's getting short. And if you notice how this low comes just shy of this low, that is priming it. That is priming liquidity. So when the market comes just shy of an old low and then turns away from it, anybody who is long with a stop loss under this low, they get a sympathetic sigh of relief because the market came just close to their stop and then turned away. So what that does is that engineers more sell side liquidity because now retail traders have more faith, more trust in this area as support. And notice how we kind of trade off of this area as well, right? So this is a strong, this area is probably viewed as support in retail eyes. They're probably getting long off of that when we see this. This is engineering sell side liquidity. We primed this low because we came just shy of it and then turned away. If I go to, let me go to 5 minute. See how we came just shy at that low and then turned away, but then we came back later and just ran through it. So that is priming that low. That is priming liquidity. So that could be some logic behind maybe taking a trade here, but I mean, it's just a lot of back and forth. These aren't conditions that I want to engage in. Now, had I not froze up, I would have never stopped out of this trade. If I did place my stop 2 ticks above candle 1 high, not candle 1, candle 2. But it is what it is. It's fine. I will literally see my trade model present again in price action tomorrow. If I drop a fib here, we can see that we struggle to get above consequent encroachment. And then here we don't even reach it, so that indicates weakness. And so we can't close above it. So pair that with the logic that each time we take a short-term high, we see a lack of displacement. So that tells me that somebody's accumulating shorts. And then we run that primary sell side. So there's still nothing that I would like to trade off of. There's no separation in the ranges. It's just a lot of back and forth. A lot of very wicky price action. The conditions are muddy, dirty, ugly. You don't want to trade this. So it can do whatever it wants to do. I don't want to be involved. It looks like we have an immediate rebalance here. Wait to see if we accelerate lower. Immediate rebalance is simply, this is a not really a large range candle, but immediate rebalance is simply you have a large range candle like this, and then we come back up, trade right into the previous candle's low right here, and then we'd expect acceleration lower. But because the damage is already done down here, we already ran the stops down here, we probably won't see acceleration lower. We have volume imbalance here that I could reach into. These are relative equal highs. So here's new minor buy side liquidity pool. There you go. Here we go. Move that away. Okay, good. So if this candle closes here, then we have new sell side liquidity. This was taken, so get rid of that. But actually, no, I'm going to keep that on. Let's see how we trade at this old low. So if the market really is heavy, then our next draw is Tuesday's low. So we're in closer proximity to the previous day low. It's not reasonable to see the market come all the way back up here to the previous day high, because we're in closer proximity to the previous day low. So we have a rejection block down here. Look at the bodies closing at the old low. So ahead of FOMC, the market is being pushed into a discount. I want to make note of that. Look at that. 760, 760 to the tick. That was crazy. We literally have no imbalances forming. So that defines the conditions for you right there. We have no separation in the ranges. We have an imbalance here, here, here. Besides that, you don't really see anything. We have this tiny little imbalance here. The volume imbalance here, look how it colors inside the lines. Very wicky price action. Body's respecting that old low. We have this large wick here. See how we trade around consequent encroachment of that. But there is nothing in price action that I would engage on. I don't see my model, so not trading. I'm just studying, and it's still fun watching the candles paint. Look at the work off that. These lows are relatively equal. On the 15-minute, we're driving lower. You could reach into Tuesday's low, but I don't know if that's reasonable given that we have FOMC later today. I think it's more likely that we probably stay in a range, but I mean, from the 9:30 open, we traded lower and haven't done anything but trade lower since then, so. So we have a nice reaction off that wick right here. Drop a fib on that. Look at that. We'll see if we reach into this low. Pretty heavy on the day. The ranges are still ugly though. No separation. Just a bunch of wicks. That's dirty. I don't like that. So now we're approaching 10:30. From here to here, it's probably the only good move. I wanted to sell short here, but I froze up, literally. Now if I have my stop 2 ticks above candle 2 of the imbalance, then I would have never stopped out. It came 1 tick shy of that, but it's fine. At 9:30, I outlined that the draw on liquidity was this low, so that's what I was aiming for. I didn't want to sell short here because it was too far into a discount. I was looking to sell short here because the bodies were still closing inside of the first presentation. We ran this short-term high, and then I dropped a fib here, and I was studying the work off consequent encroachment, and we wicked off of it twice. We closed below first presentation, so that indicates weakness. And I would have aimed for this low. That's what I was looking for at the 9:30 open. Simply because going into 9:30, if you look above the marketplace, look how the candles are reacting to the new week opening gap as well as the premium wick on a 15-minute chart. Right, we're closing below it. So what does that indicate? Weakness. The body's telling you the narrative. If we're closing below the new week opening gap as well as 15-minute premium wick, that indicates weakness. And if we look below the marketplace, we have these smooth, clean lows. Above here, you don't see anything smooth, it's jagged. So the market moves away from areas of price action that are jagged, and it attacks areas that are smooth and disrupts that. This was smooth, relatively equal. It attacked that. It's pretty simple logic. It's not hard. It's not complicated. So that's literally how I established my bias at 9:30. And we also had a premium gap opening, so we gapped up relative to previous day settlement. You can see, let me get that out of the way. You can see previous day settlement was here. Let me go to 1 minute. Previous day settlement was here. We gapped up. So we have a premium gap opening, and I know that within the first half hour market open, the opening range, we have a 70% likelihood of trading to consequent encroachment. PM session will definitely be crazy with FOMC. I've never watched FOMC since I started ICT, so I'm probably just going to watch that. I'm not going to try to trade it at all. But I mean, he's talked about what the profile usually looks like, where you have an initial run at 230, and then 230 usually runs against that. So I'm going to look to see if that plays out, but I'm not going to be taking any trades. But yeah, this AM session right now is pretty shit. So now we have relative equal lows down here. So all this back and forth, trash. Don't want to be involved in that at all. And now, out of nowhere, we just have this run up. On the 15 minute, we leave all these lower wicks. It's pretty messy. Let's see if this thing still acts like a brick wall to price. The buy side at 9926. Yeah, 100%. I mean, yeah, that's what we're aiming for this whole time, right? Where is it? There it is. And we also have these new week opening gaps too, so that would be a strong draw. But down here is pretty smooth, so I wonder if they utilize this today at all. Who knows? So I didn't come in today with the intention to push any buttons. I just wanted to observe what does price action look like the morning of FOMC, because I knew it was going to be shit. So you got to know exactly what the market looks like when you don't want to engage. So after this stream is over, I'm going to screenshot this and annotate it a bit, and then I'll mark it up and record it in this right here. Where is it? Yeah, it's here. So I'm recording conditions, right? High resistance liquidity conditions, low resistance liquidity conditions. Knowing the difference, knowing when the market is moving in a way that gives me, high probability trading opportunities versus the exact opposite, low trading probability conditions. Right, like this, like shit price action, just trading sideways, not going anywhere. Which is kind of what we're seeing today. Where is there? Not kinda, it is what we're seeing today. We just had that initial drop lower at 930. Was not willing to sell short here because we're in a discount. Froze up here, didn't sell short there. We're still reacting off of first presentation. No, I'm literally just watching price action. I'm not pushing any buttons. Took this short-term high here. Also look at the work off the consequent encroachment of the opening range gap. That's perfect. We have relative equal lows down here. This made jagged. We have these. So on a day like today, it's really hard to figure out what the market wants to do, but at 9:30, I was aiming for this low. But it didn't give me any opportunity to take the market down there. Any opportunity that I liked, like sure, you have a trade here. Like you could probably soup these highs knowing that the market's trading into a higher time frame 15-minute imbalance post 10 a.m. If I were to mark the high of this imbalance on the 15-minute, right here. So here's the high, or here's the low of that bearish fair value gap on the 15-minute time frame. I mean, I could have souped this shit, right? But look at the conditions. Ass. Back and forth. Not doing anything. It's still closing below first presentation. just nothing's really clear. It's not clean. So I'm not engaging. It's fine. I don't have to trade every day. Took a nice setup yesterday though, and that played out beautifully. So today's literally my second day of trading since I started studying ICT 3 months ago to the day. I started with the 2022 mentorship. I literally ran through it twice. I watched it twice. I took hella notes on it. Let me show. So I literally ran through this shit twice, but nothing clicked for me. That was frustrating. So then I started watching other YouTubers. Nothing clicked for me there either. That was frustrating. It wasn't until the 2024 mentorship. I don't know if any of y'all are watching that as well. Exactly. You're exactly right. Appreciate it. I don't know how to say your name, but Haliax. Yeah, just do something more productive with your day. Like, you don't have to be sitting behind the screens when the market is doing something like this. I'm probably going to wrap this up here soon. Maybe at 11. So I like live streaming. It's fun, but I don't know if I should be doing this because I'm relatively new to trading ICT, and I really need to focus on literally just the market and me. So I don't know if I should be live streaming, but I'll see how it goes. Like, I was looking to take a trade here and I kind of froze up, and I think the fact that I'm live streaming adds some psychological pressure to that. So I didn't sell short there. So I don't know if I'll continue doing this, but I actually really do enjoy doing it. And I feel like talking about what's going on, outlining what I see in price action also helps me stay connected to what the market's doing and well aware of what's going on. So, I don't know. Might continue to keep doing this. I don't know. It's fun. I really like it. Now, when I'm an experienced trader, I think I'll 100% be live streaming. And I also like to journal very, very extensively throughout the day. I've got this paper tablet right here. And I journal the shit out of everything, literally. But I think I'm going to end it here. Nothing going on. I'm going to get going with my day, man. Do something more productive. Nothing really going on in price action. So that'll be it for this live stream. I don't know if I'll continue doing this. But anyways, if you watched, appreciate it. And I'll see you next time. Maybe. I don't know.